Hello and welcome. In this video I'm going to explain to you what consolidations are. I'm also going to explain to you why it's important where we understand what consolidations are, but also how they can affect you in terms of trading. The basic principle behind consolidations are it's a sideways price movement that's within a range. The tighter that range, the less promising it is in terms of how you can trade a consolidation. Now, some people call sort of trading within a range sort of swing trading because you're hitting supports and resistances all the time. So the first fundamental thing that you have to understand is how to find supports and resistances, and we do have a video on that. So once you understand the principles behind a support and resistance, being able to find consolidations should be relatively easy. The other thing with understanding and finding consolidations is that they are not only very easy to find with the eye, you can spot them immediately, but also how they fundamentally affect how they work within the chart. The essential understanding with consolidations are that they, and I explained this briefly in another video, is that there's a very tight period of trading that's not really going anywhere. They tend to last, they can last usually at least a few days, sometimes a lot longer, as we can see in this respect, almost a couple of months. And they can break out. So we look at sort of supports and resistances, and there are, depending on how high the price of the stock is and how strong it moves within that, you can trade them as they hit sort of the resistance in this case and then the support, and then that's pretty much what swing trading is. And people write books on this stuff. You know, they write a whole book and a whole course on swing trading. The basic principle is if you're able to find the support and resistance within a wide enough range, then you're able to find the pivot points of where it's likely to retrace and bounce. So with supports and with consolidations, they basically are putting the brakes on a current trend movement. So here we have sort of a bit of a burst, and then we have a consolidation. Market tends to tire a little bit, then another burst, then a consolidation, and then another burst before it collapses again. Then we have a gap in the market and a dramatic fall. And then going back on what the Dow theory is, even just over this very short period, we could have sort of phase 1 there, phase 2, and then phase 3. Oops. So, as we can see with Carnival, I've got a bullish move and then we've got a consolidation. So what would you do with a consolidation? Well, the majority, well, first of all, let me discuss what the difference between a range and a consolidation is. Admittedly, yes, a consolidation is a range between two prices, otherwise it wouldn't be a consolidation because it has to have that boundary. However, what I would call a range is a much broader movement where it's actually trading up and down very freely, but within quite a strict range. So we pretty much have a range here, and we'll just look quickly for another one just to show you. Again, we kind of have a range here, most definitely, between those 2 points. So those are ranges rather than consolidations. So we're coming back to Carnival, and as we've previously showed with a range, it's quite a dramatic movement within quite a large area between 2 points, support and resistance. Whereas a consolidation is a much smaller range, and as you can see here, it really isn't doing a great deal. It is moving up and down, but it's such an awkward movement that there is little that you would do. And in fact, if we say we're at this point, rather than sort of what we're seeing here, so this being the current point that we're at, say, we would most certainly stay out. We would not trade a consolidation, simply because there's very little movement. There can be quite dramatic movements either side of them, and it's usually quite difficult to gauge. You can pretty much gauge where it may go if you're following the trend and you understand where the trend is going, but they can turn around and bite you. So the overall thing with consolidations are, if you see one, they're a good point for finding supports and resistances because they're very rarely ignored. Also, it's important to understand that if you're actually within a consolidation at the point that you're looking at that chart, you do not touch it, you do not trade it, because it can bite you, certainly one way or the other. So that is consolidations.